And for more on this, let's bring in CPA Dan Geltrude. He joins us now. Dan, good morning.
Good morning.
So a lot of concern right now about repeal of the state and the local deductions, in particular for these high net worth states, these top states. You've got New York, New Jersey, Connecticut, California, and Maryland. This is where the fight seems to be. Is this bad for taxpayers in these 5 states?
Well, according to the Trump administration, there are going to be offsets, specifically getting rid of the alternative minimum tax. And what that is designed to do is to not allow the deductibility for state taxes. So there's going to be offsets to having the removal of an itemized deduction for state taxes. I think we're jumping the gun because, remember, this is simply a blueprint for where the president wants to go. And on top of that, we keep referring to it as a tax plan. Yes, it's a tax proposal, but it's really more of an economic plan.
It is. Well, for the corporate tax rate, sure. I mean, even 20% is better than 35. But let me push back here. I was looking at something that the Tax Policy Center put together, to your point, but they're saying something a little different. They say 3/4 of those, in those states in particular, that owe AMT and deduct state and local taxes right now would, under this proposal, get a net increase. So that even if you're talking about, and that's the pushback here, that you're going to have that doubling of the standard deduction, that's actually not the case, and that most of these taxpayers in these states, to Chuck Schumer's point just now, are going to be hit.
Well, again, we still don't really know that because the plan is not finalized. Look, this is a work in process. Let's see what we can come up with when everything is said and done. The president has made a commitment that there's going to be a middle-class tax cut. He wasn't excluding New York, California, New Jersey, some of the other states. He said middle class across the board. I believe if initially this isn't working out, they're going to retool it and they're going to make it work because we need middle-class tax cuts.
You know, it's interesting because this makes me want to move back home to Texas, because look at the bottom 5 states right now when it comes to that state and local income deduction. In Texas, for example, all these, they don't have state taxes. That's why real estate is so attractive in Texas and Nevada, Tennessee, North Dakota, South Dakota. But these states don't have the voting power that the larger states do. Isn't that where this is really going to wash out, is in Congress?
Well, it very well might be that. And what we have to look at, too, these states that are having high tax rates, they have their own issues as a standalone. There's plenty of people that are moving out of states like New York and New Jersey that are moving to states that are a lot more tax-friendly. That's not helpful to them. So this problem is not really a federal problem, which is where we're going now, but these states individually have to address these issues, and this is only going to put more pressure on them.
Yeah, and again, I'm sure that you've seen, a lot of businesses, hedge funds in particular, have all left Connecticut, New York, New Jersey because of the high tax environment. And guess where they've gone? Florida.
Of course.
Dan, thank you very much. It's good to have you on the show this morning.